Good afternoon and welcome to Boom Markets Talk Show. This is your host Rian Hobson. It's a Friday and it's the cautionary trade today because there is quite a lot of news that will come out next week. So please don't leave your trades open for next week because it will be a bumper. We will also look at the retail sales number that come as a total surprise with all the inflation in the United States. Retail sales beat actually forecast yesterday, and that was actually the game changer for the US dollar yesterday. So we will look in detail with that numbers because that will also affect the Federal Reserve decision that will come out next week.
Keep your finger on the market pulse with the News Alerts tool. Stay up to date on the latest sentiment across all the major asset classes. Uncover bullish or bearish signals tied to specific assets that could be developing before major price moves, and track how news sentiment correlated with price in the past. Track the news volume on an asset, its fear index, and get a better feel for its underlying strength. All with News Alerts, your central hub for market information. That's higher trading from MarketsX.
Good afternoon and welcome back to Bull Markets Talk Show. This is your host Rian Hobson. It's a Friday. You can see I'm wearing casual wear, so please be cautious today when it comes to trading because there's quite a lot of news that will come out next week. But before I go on to next week, is the move of the dollar yesterday that smashed everything. Gold dropped to 1750. You can also look at the oil prices. Natural gas, which was my favorite, also took a dive yesterday with the strong dollar. And that's all to do with the retail sales that came out yesterday. But there was some actual information in the retail sales data that came out that was an absolute surprise. And for that, it shows that where the dollar will go next week. So just look at the data for the retail sales. Retail sales in the US unexpectedly rose to 0.7 in the month in August of 2021, following an upward revise of 1.84 in July and beating market forecasts at 0.8% drop. Sales rose most for the non-store retailers at 5.3%. That was a big one. This word here says it all. Non-store retail sales at 5.3%. Furniture at 3.7%. General merchandise stores at 3.5%, and food and beverage stores at 1.8%. Sales went up for Malaysia stores at 1.4%. Building retail sales and garden equipment at 0.9%. Gasoline stations at 0.2% and health at 0.2%. Such increase were able to offset a flat reading for food services and drinking places as the coronavirus Delta variant spread at a 3.6% drop in auto sales due to product shortages. Other decreases were also seen for electronic stores and sporting goods and hobby musical instruments. Books at a negative 2.7%, excluding autos. Retail sales jumped by 1.8%. Now, if you just look at this data here, which was a bit for me I would say it was in favor for the dollar. But this part here, where the non-store retail sales, so this means this has to do with Amazon. And with the new variant spreading, I think people prefer to stay at home. And that's why these sales actually increased by a 5.3%. And also, if you look at furniture at 3.7%, it looked like people just gonna chill at home. General merchandise stores at 3.5%. So this for me said that people bought stuff to stay at home. That's why these sales actually increased with the non-store retails at 5.3%. So that says a lot for me that people actually prefer to stay at home, and they bought stuff to stay at home because obviously it's getting winter. On the other side was actually also another surprise for me. Not a big surprise, but this part here, such increases were able to offset a flat reading for food services and drinking places as the coronavirus Delta variant spread, and a 3.6% drop in auto sales. So if you look at the job numbers for the United States, most of the jobs came from the service sector, I would say hospitality and leisure, and that is where the food services and drinking places come in. So the bulk of the jobs was created with your pubs and restaurants and those type of things. So if those places had a drop in sales, then it means we can look at the next non-farmers payrolls number maybe with a glimpse where it will maybe drop because the main sector is not performing, and which is the service sector actually. So that number was a bit in the up and down for me with the retail sales, although the dollar went up, but I think it was more a risk on story when the dollar went up, because it looks like there is a scare for the new variant in the United States, and that's why the dollar went up. Although it was a surprise to me also with the retail sales that went up. I mean, I definitely expected it's going to drop due to the high inflation, but it actually increased. But I think it was more to do for me with the new variant, and it looked like people's just going to chill at home for the winter. I hope they have enough gas also. Also on the other side, if you look for next week, next week is a big one. We have the Canadian elections that will be on Monday. Then we have on Tuesday, we have basically a flat day. The day afterwards is Wednesday. Then you get the FOMC meeting that will come in. Now, that will be actually a big one. That's why I actually said it's a cautionary trade, because if you leave your trades over for next week, then you will sit with problems because we are not sure will the Federal Reserve taper or not. That is where the big thing comes in. Or if they taper, with how much and how quick they're going to do it. So that is also a big question mark. So if you have trades today, I would say close it and take a hike rather. If you have profit, good for you. You have losses, that is how the market goes. But if you keep those trades open for next week, there's a high possibility that you might get some serious troubles when it gets to next week. So please be very cautious today. Next week, Monday, it's the Canadian elections, and then you have on Tuesday, which I think it will be a low liquidity day. On Wednesday, that is where things will pick up, and that is more to do with when you look at the FOMC meeting that will be later in the evening. So please be very careful. In my circumstances, I will do absolutely nothing until next week, Wednesday, when the FOMC release their statement. That is where I will come in and actually place a trade, or I will wait for the next day. But please be very careful for today, Monday, and Tuesday. And I will say rather wait until Wednesday, because I think we might see next week there will be a low liquidity week. Please don't forget to subscribe to my YouTube page. Please, there's a link below. Click on a link below. It's on marcus.com. Register your account, fund it with $250, and I will give your classes absolutely free of charge. You just have to fund your account, and then we will do all the classes for you for absolutely free. So that is it from my side. Have a lovely weekend, and then I will see you guys on Monday at the same time at 1 o'clock. Bye-bye.